What's going on, guys? It's GBP baby. Welcome to another video. Today we're going to be back testing large expansion weeks. We've just had a very large expansion after FOMC, so I decided that we should get in the charts and back test all of it. This is probably going to take over a couple of episodes to get through. We're going to be looking at GBP USD, and yeah, we'll be starting in December. Now, December isn't the most ideal month to be trading in. So I don't recommend anyone really spends too much time in the charts, but it's months like these that are probably best for me to be out here analysing and looking into, because they're the most difficult to trade. So, but yeah, I haven't really been in the charts in a while. I've just been enjoying my Christmas holidays. So yeah, I thought I'd get straight into it. So obviously we're going to start with we're going to start with the Asia session. Now let's mark out the high and low for Asia. As per usual. And also the midpoint, because the Asian session is used as like a buffer for price action, and you'll see what I mean by that. And we're also going to analyze obviously the displacement. So we don't have like proper displacement until here when we start fully breaking down. So I'm going to start analyzing here, because all of this is just pretty much consolidation, a lot of back and forth price action. But we have a nice breaking market structure here, we have run and stop, so let's just get straight into it. Now, it has been a while since I've done this, because I recorded all those videos throughout December. I kind of took a break from backtesting, so it's good to be back. We have a break of structure here. And this is also a breaker. High, low, high, low, high, high. And then we break lower, so we can look at the 50% level of that. And then we have a nice little breakaway gap here. So this is going to take a while to get through everything. So like I said, this will probably take a couple of episodes, but if you're here for it, you'll definitely learn. Breakaway gap there. And I'm also looking at this wick here. We can look at the 50% level of that. And you look how you respect that, and it trades back into this consolidation. This is the original consolidation, right? We trade away from it, and then we anticipate price to pull back into it, so that would be another selling point, but we'll start to put in our ideal positions at a later point. It's consequent encroachment. We fill in this fair value gap, this entire range gets filled. So let's look at that. You can look at how price trades into it and make it a bit lighter though. I'm also going to make sure that the midpoint of this is also delineated. Another entry here as we trade into this smaller fair value gap. And then you can see our price trades away, leaving this range quite nicely too. This is a breaker, high, low, higher, high, and then we break lower. But this, I see this as like an inversion, or bearish order block. So let's just, let's get that drawn out. Back into this low one more time. When price does things like this, I see it as like a defended level once we leave it, so it'll pull back and then it'll trade away from it. Now I don't really want to see price trade back past the order block that create the move, because this will then act as like a reclaimed order block, as in when price trades back up to these levels on the buy side, it should create a reaction. But we'll look at that, we'll look more into that later. But basically what I'm saying is that this order block here I'd be having my eyes on, because I'd anticipated that there's resistance, and as you can see it clearly does, in line with this fair value gap here, and volume continues to stay below. We have some beautiful relative equal highs that get formed here, and I believe that's the midpoint of the range. Is it? No, it's below the midpoint. But regardless, this is buy side liquidity that will be residing above there because they're relatively equal. Very smooth edges. Smooth edges like to be made jagged. A lot of consolidation, quite heavy consolidation as well. And then you can see price again leaves that range in a similar fashion to what we just analyzed higher up. You see there's low liquidity, but remember this is the Monday, so we don't really anticipate too much. nice pullback into the middle of the range. So let's, what I'm going to do now is I'm going to mark out the midpoint of the Asia range, and then we're going to start looking at the London session. Oh, my bad. I put the wrong timings. This is supposed to be here, guys. Whoops. And what I'm going to do is I'm going to drag the Asian session into the London session, because you'll see how price climbs up back through the range of the Asian session and uses that as like a buffer zone. Now we have a nice consolidation here from this high to this low. You can see our price stays in a quite tight consolidation. It's always best to draw out your consolidations. Now, original consolidations is something that I need to work on myself, because I'm not actually entirely sure about how they work. But you can see after midnight, price comes down, trades away. Where does it find support? On this level here. Find support, trade higher, find support back in the bullish order block. And we reach for that buy side liquidity before pulling back to that original consolidation. And then you can see the typical ugly price action for December. Very dangerous. It's an implied fair value. And look how volume stays within this consolidation range. A lot of back and forth price action there. That's a reclaimed order block. Price rates into that, we move away, continue to find support. And remember, we had this buy side liquidity that was getting built up here that we trade into, and a nice fair value gap that it touches. Trade back into a bullish order block here. This is all not very nice price action. I am going to mark out the 3 a.m. candle though, because 3 a.m. is when we usually anticipate either a complete reversal during London, or what is it? A complete reversal, and this is from my backtesting. A complete reversal or a retracement, but here we have a pretty much a full-on reversal. So you can see we come down, run out the sell stops here. 3 a.m. moving higher, and then we've got a nice breakaway gap here. Standard fair value gap to enter on here. Why? It's after the 3 a.m. We've traded back into the original consolidation. Volume is respecting the bullish order block. we've had a large expansion away at 3 a.m. So there's lots of things that are coming into play here. We can buy that. And also we're trading into this order block here. This level is a bullish order block. Once we trade through, we eventually run out of these stops, resting above here. And here, we have these are relative equal highs. Here, all across here, so we can draw that out. Buy side liquidity. And then once that gets taken out, well, I'm now looking at this bullish order block and this bullish order block to provide support. And then you can see here 50% of this mean threshold gets respected. This is technically a breakup because we have a low. Well, the breaker's here, but we have a low, high, a low, low. So we look at the last up close candle before the down move, and then we drag it out. And we want to look at volume, the last highest closing or close candle, and you can see how volume respects that here. That gives us our breaker. So that means we can buy throughout the breaker, and when price returns to it with the preface that we're going to be running for the Asia highs, which is classic price action. So that would be a nice place to remove some of our stops at the Asia highs. Oh, sorry, let go of some of our positions. And then look how we continue to find support at the 50% level of that. And again, breaker, low, high, low, low. So this is all breaker levels. So we can drag that out as well. Breaker, high. With a nice fair value gap. When you have like fair value gaps pairing things such as breakers, such as highs and things like that, it always helps. Because we can see our volumes continue to respect it. So now we have another consolidation. So we can anticipate this getting returned to. Just get returned to, or we trade back down through it completely on the London session. I mean the New York session, but we'll look into that. So let's now draw out the New York session, 7 till 10. Now this New York session isn't the best. You can see through after London we continue to trade higher. A lot of consolidations, a lot of pullbacks, and yeah, not very smooth price action, but what can you do? Low, high, low, low. Draw that out. Small little breaker high here. Trade into that. here, low, high, low, low, and we break higher. So price is continuously stacking on itself. Breakaway gap here, or measuring gap. Probably a measuring gap, to be honest. A measuring gap appears usually halfway through a range. You have breakaway here, this would then be a measuring, and then we have terminus, which is up there. But I don't, or if this is the original consolidation, I guess we have see, things like that I'm not very clear on, but we can only get through practice. I'm going to call this a measuring gap because it's on the way up. So we expect this to be left open, and we expect continuation. And I say that because if we look at the complete range, after, remember this is another consolidation right here. Here, back and forth action, original consolidation. As soon as we leave that, we have a range, so we can look at the low, right through to the high. And you'll see where that measuring gap occurs for me to say that. So that's something to take into consideration. I make this look so easy. It's not easy, guys. Especially December. I've been trading this December, and I'll never trade in December ever again in my entire life. So when I see shit like when I see action like this, excuse my French, what I like to do is just mark out how the highs are constantly getting ran and how the lows are continuously getting respected and the order blocks are getting respected. So let's look at how these bullish order blocks are continuing to act as support on the way up. We have one there. Trade back into another bullish order block here, and then we have another bullish order block here. It's traded down into, and then we make the high at 7 o'clock. So when we reach 7, I anticipate some kind of retracement. Where do I expect a retracement to? I remember this day, I was anticipating it to come right back into the London range. We didn't actually reach it until London closed, so price action wasn't ideal, but let's still look at the reversal. It's always good to study reversals. So where do we see a break in market structure? I don't see a nice break in market structure until here. This low get taken. It engineers this low to be grabbed, so we can look at that as a break of structure. You can see this level acts as a rejection block. Because why? Because price trades into it and then turns away within it. You can look at the midpoint and you can see how price respects that. And one thing to notice as well is this candle closes outside of it. When I see candles close outside of it like that, after trading into it to the 50% level and respecting it, it likely means we're going to continue lower. And we have the fact that it's 7 a.m, so we anticipate some kind of retracement, especially when we continued right through to 7 o'clock, moving on the upside. At that point, we can target this low and this low more specifically. So I can max outside liquidity. One thing I do want to take note of is that if we wanted to get in on this large expansion here, which is easier said than done. How long have we been going? We've got 5 minutes left of this episode and we haven't even finished Monday. This is going to take a while to get through these, but hey ho. So we've got buy side. This closing above this swing high like this is nice to see. This candle here closing above this swing high here bearing in mind that this is a consolidation, should be confirmation for us to anticipate higher prices. Furthermore, we see respect of bullish PD arrays here, so this bullish order block is being respected. I like the way this closes above it, and we have this as a breakaway gap. Because prices continue to respect it, and then we have a nice expansion, and when price pulls back into that fair value gap, that would be an ideal entry. Because it's on the breaker high and it's on that candle that we closed above. Easier said than done, guys. I'm not saying that this is just that easy, but it's just understanding how the price is delivering. So selling at the rejection block is very advanced. Then we can see we move lower, we'll pull back into the range one more time. But if we have this bearish order block, as soon as this candle closes below this low, like here and here, this is our bearish order block. So now what I'm looking at, the 50% level. Does the 50% level get respected? You can see volume respects it there. Yes, at some point we were trading back into that rejection block, but we want to see volume respect it, and it does. And that should be enough for us to then use that as an indication to sell. So that's mean threshold. And then we run for these lows. So we can actually sell into this. This is here we have a mitigation block. So we'll talk about all this as I get into it. Let's see. And here's mitigation as well. But let's look at this. Let's rebalance. This is immediate rebalance here. Trades back into itself and then trades lower aggressively. This is a mitigation block. And it's a mitigation block because we have a high, a low, a lower high, and then we move lower. So as price trades back into that level, so once we trade through it, we can be selling in it as we're trading through, and once this wicks back into it, with a bearish order block, mind you, at the 50% level. So we have a bearish order block within the mitigation block as well. This should be a high probability selling with time as well. Remember, time comes first. It's 7 a.m. so it's the opening. We're expecting some kind of run on stops. We've been expanding all since London. I want to see these lows get taken out. I want to see the run on stops, and you can see that's exactly what we get. So selling into this would be completely fine. That's going to bring us to the end of this episode. Getting through this week's going to take longer than I anticipated, but stick around because at least I can make a lot of episodes out of this. And yeah, I hope you guys enjoyed. I hope the music wasn't too loud, and I'll catch you in the next one. Peace.